Hello, YouTubers, friends, compatriots, coolers, shelves, desk lights, stars, peasants, vassals, first-time home buyers. I'm Easeful Idiot, and today I want to talk about a little secret about the housing recovery. And I'm not sure how common knowledge this is, but here we go. I was reading an article and found out that Blackstone Group is the largest institutional investor in the U.S. housing market now, and it's expanded its credit line to buy distressed homes to $2.1 billion for this next year. And that's up from $600 million last year. And the contributors to this buying operation are Deutsche Bank, J.P. Morgan, Credit Suisse, Bank of America, Goldman Sachs. And in 2012, institutional investors bought $3.5 billion worth of distressed homes in real estate, 20,000 homes. Just last year, and they're on record to double that this year. So what an interesting fact. We now have a market that the big banks were not traditionally involved in, and now they are putting huge sums of money in the single-family home real estate market. So big banks, the ones that caused the collapse in the first place, are now taking this opportunity to become the new slumlords. And, of course, I use that term rather casually because the fact is these banks will probably get these homes cheap enough, and they pay cash, so they're not going to be paying interest for 30 years. And they can afford to put a little money into them and put them back on the market. And they anticipate a huge market, obviously, because they know that the people who qualify and have credit or will be extended credit, for example, from them, those particular banks, will not get that credit, will not be able to get these home loans. And so they know that enough people that have been pushed into poverty and enough of the middle class has been pushed down into the working class that renting will be the future for some time to come. So as the banking industry says, quote, the crisis created an investment opportunity, unquote. And the hot spots, of course, are California, Arizona, and Florida. And so home ownership was about 70% at the boom nationally, and it's now down to about 65%. So that leaves a lot of homes out there in the market. And for the past 5 years, $7 to $9 billion worth of distressed single-family homes have been purchased and converted to rentals by institutional investors, hedge funds, and private partnerships with foreign investors. So $7 to $9 billion just in the last 5 years. So we're looking at probably $20 or $30 billion worth of institutional investment in housing. And since 52% of all rental units in the country are now single-family homes, this is going to be continued to be a huge market. In fact, here's the big number. 32% of home sales nationally have been to institutional investors, according to the National Association of Realtors, paying cash. And so that is a huge portion of the market. So not only that, they're pushing prices up an average of 10% in the markets they work in, like California, Arizona, and Florida. So the housing, so-called housing recovery, just like all the other recoveries, is an illusion because we have institutional investors, the bankers, going in there and buying up this property, 32% of it, year after year after year. And they also, of course, are going to collateralize it. So just like they did with mortgages, they're going to take these rental agreements and collateralize them and sell them as securities. And needless to say, there's going to be a lot of risk in that, just as there was with homeowners. So they're scooping up these houses by the dozens and hundreds at a time, and through all cash bulk transactions, and they're even buying properties off of Fannie and Freddie and bank repossessions. So they're getting these houses for pennies on the dollar. In fact, one woman was quoted as saying, "We can't find anything because investors are gobbling up everything that is affordable." And So there you have it. We have investors buying 50% foreclosure auctions. They are going to be moving into the rental market, and one can already see what's going to happen, because we already have rentals, rent rates rising because of the flood of people going into rented housing. In fact, I think it's something like 75% of people who had their houses foreclosed on, of course, are renting single-family homes now. So this market has been flooded. Rents are going up, and now that the big banks are going to be owning these properties, you can look for rents to continue to go up and up and up. So the Census Bureau data says single-family rentals grew by 21% between 2005 and 2010, and that's compared to a 4% increase in total housing. So that gives you an idea of how much rental housing explosion we're seeing. So between 2005 and 2010, single-family home rentals grew by 21%, and there are 13 million total rental houses in this country, $1.5 trillion worth of property, and that's what the banks are looking at. That's the number that we're looking at, 1.5 trillion. They want a big piece of that, and so Americans have been debt slaves to the banks for credit cards and their loans, and now renters can look forward to being debt slaves to big banks, who are going to be the new slumlords in America. So there you have it. We have giant institutional investors for the first time moving into the rental home business en masse, and it's probably not going to turn out well in the end. So there's another secret about the so-called housing recovery that isn't happening. I'm a useful idiot. Don't you be one too.